What's going on, everybody? This is Curtis, and today we're talking about Airbnb. Airbnb is currently trading at about a $100 billion valuation, but their once phenomenal growth rate has slowed, even before 2020. So is the company overvalued, or will they be able to continue to grow into the future? Let's find out. In this video, we'll break down the bull case and the bear case for Airbnb, and I'll let you guys be the judge of which one's the winner. As I'm sure a lot of you are already pretty familiar with the product, we'll just jump to some quick facts about the company, and then we'll get into the bull case and the bear case. Airbnb has listings in 220 countries and regions, including over 100,000 different cities. 86% of the listings are outside the United States. They have welcomed 800 million guests since they've been a company, and they currently have 4 million unique hosts, which have 5.6 million listings. And that 5.6 million listings is more hotel rooms than Marriott, Hilton, IHG, Wyndham, Choice Hotels, Best Western, and Hyatt combined. Alright, so let's get into the bull case. The first most obvious argument here is the reopening trade. Now, everyone knows that there's a lot of pent-up demand for travel at the moment, but I think Airbnb will see a better than average boost in travel because people, I believe, will still be slightly hesitant to get into big crowds again. So instead of staying at a hotel where you have to see the receptionist, walk by people in the hallways and the elevators, maybe you stay at an Airbnb instead. You can get in the door, you can stay in the facility, stay in the property, and when you leave, you never see anybody else besides for who's already with you on the trip. The second point here is that Airbnb is basically a verb, like an Uber or like Googling something. If you want to stay in a non-hotel place when you travel, normally me and my friends will say, let's get an Airbnb, meaning just get someplace that's not a hotel. We might end up looking at VRBO, but that is the phrase we use when looking for a non-hotel stay. The third boost here is the work from home trend. Now, stay with me here. So if you can work from home, you can kind of basically work from anywhere. This provides the opportunity for you to get out of major cities if you want to go travel, staying in an Airbnb where you can get a good base camp setup, still have the availability to travel in that region on the weekends or in the evening times to see a different part of the country or a different part of the world. And maybe while they're renting out a place abroad or in their area, they also might rent out their place in Airbnb as well. And this could increase the supply of listings on Airbnb and obviously increase the demand elsewhere for long-term rentals. Point number 4 here is the serviceable addressable market, which Airbnb has at $1.5 trillion. And then their long-term trajectory projection has the total addressable market at $3.4 trillion. One note here, I've seen a Seeking Alpha article that actually compared the revenue of Airbnb to the total serviceable market, wherein it actually should be the gross bookings value to the total serviceable market. This is because the gross booking value is the value that the consumer pays, and the revenue Airbnb shows is just a percentage of that. So the second note here on a positive side is that Airbnb, in their calculation of the total serviceable market, excluded long-term stays from that calculation. However, in 2019, they had about 14% of their total nights booked were long-term, meaning longer than 28 days. And then in 2020, that number actually increased to 24% of total night stays. So if we go back to the total serviceable market, if we add in the $0.2 trillion, that is the addressable long-term market, that gets us to a total serviceable market, for my calculations here, of $1.7 trillion instead of the 1.5 that they have. And if we use their total gross bookings from 2019 to this new $1.7 trillion value, we get 2.2% gross booking value compared to the total serviceable market. Next point here is that experiences on the Airbnb platform are becoming a bigger emphasis for the company. So if we look at back to the total serviceable and total addressable market, we can see that the experiences they're currently shooting for and going after are $0.2 trillion. However, there is another much bigger pie, which is about $1.1 trillion, which is non-tourism recreational spend. The last point here is that Airbnb has a lot of room to expand in areas like South America, Southeast Asia, India, and China. And the most recent numbers I could find as an example of this is that they have 60,000 listings, whereas the US, they have 660,000 listings. So if we take a look at the bull case as a whole, it's essentially boiled down to there's a lot of growth ahead of them in a honestly pretty competitive market, but there's a lot of room for growth if they can capture it. So let's take a look at the other side of the story and the bear case. The bear case is essentially 3 arguments: the valuation, competition, and regulation. The valuation argument is pretty simple, and it goes, it's a great company, but at what price? So we look at Airbnb's current valuation and compare it to 2020 numbers. It's valued at a whopping 32 times sales. But if we go back to 2019 numbers, which obviously excludes everything that we know happened in 2020, we're at 23 times sales. So if we take a look at Airbnb's main competitors here, we see Expedia here, which owns core online travel agencies, Trivago, Hotels.com, Agencia, and of course Airbnb's main competitor, VRBO. The other one we have here we're going to compare today is Booking Holdings, which was formerly Priceline.com, which owns, of course, Booking Online, Priceline.com, Kayak, Rentalcars.com, and OpenTable. So if we just take a look at the companies here on a valuation basis, and we're going to use price to sales since Airbnb doesn't have any profits at the moment, we can see that Airbnb is clearly the highest price of the three here. However, it's also growing the fastest. Now on to competition. Their main competition is VRBO, Vacation Rental by Owner. Now, VRBO actually only allows people to rent out their entire house and not private rooms like they do in Airbnb. However, this is the way their current policy is, and it could change. They haven't listed anything or said anything that they will change, but they very well could change and compete more directly with Airbnb. Their other competitors are traditional hotels. Now, part of the reason that people like Airbnbs over traditional hotels is the same reason that people will still probably continue to use traditional hotels, that you know what you're going to get. If you stay in a Hilton in Chicago and a Hilton in New Delhi, you can be pretty rest assured that they're going to be fairly similar. Obviously, there'll be some cultural differences, but in general, you know about what you're going to get. Whereas Airbnb, every place is basically unique and different, which is part of the fun. But also, if you're a business traveler or want something very consistent for you and your family, a hotel is probably the safer bet. Now, the final point here is regulation. Now, this is the most serious risk, in my opinion, to the company. And this could be nothing, or this could be everything. Now, Airbnb has been dealing with this since basically their inception, but as of the last couple of years, Airbnb has been temporarily banned or limited in places from Paris all the way to New York. They already bring this up in their 10K when they state that we are subject to laws, regulations, and rules that affect the short-term rental and home sharing business at the city, state, and country levels. Basically what they're saying is any municipality, any city, any local group could outlaw them or ban them or put stringent rules on them that would greatly restrict their ability to list in that area. And this could be in effect, like I said, from anywhere from just a tiny little community all the way to an entire country might ban them. Now, as I mentioned earlier, they have 100,000 different cities that they work in, so this is also a blessing and a curse at the same time. So this means 100,000 potential different regulations to follow, but it could also mean that if they get banned in 1% of them, that might not be that big of a deal if it's a bunch of smaller cities, whereas if you have a company that has primarily all their business, it's regulated by a federal government, like the US government, let's say, and they get banned, well, there goes everything. Airbnb goes on to say that no single represents more than 1.1% of our revenue before adjustments for incentives and refunds during the year ending December 31st, 2020, or 1.2% of active listings as of the end of last year. And before you get too nervous here, they continue to say that we do not believe the current regulations in our top 10 cities in the aggregate have had or expect to have material adverse impact on our results of operations and fiscal conditions. So in summary, if you're a short-term investor here, the valuation could bite you as the valuation might come down. Over the mid to long term, competition will be a major factor when it comes to the ultimate valuation. They say imitation is the most sincere form of flattery, and VRBO is certainly going this route, and they're actually trying to poach some of the super hosts that Airbnb currently has. Well, this competition and others like it could eat into Airbnb's ultimate growth trajectory and maybe even their business altogether. And then over long-term, regulation is kind of a wild card here. If they continue to get more adoption, more accessibility, everyone gets more comfortable with these short-term rentals, it might not be an issue. However, if countries themselves start banning these short-term listings one by one, this might become a major, major headwind to the company. So now we've gone through the bull case and the bear case, I want to quickly run down Airbnb's sort of response to this, as much as you want to call it a response, and their path for growth into the future. Because ultimately, what the valuation certainly depends on here is continued growth. So what they have is unlocking new hosts, growing engagement with our community, investing in our brand, expanding our global network, innovate in the platform, and design new product offerings. Now, I think the most important here are going to be unlocking new hosts, and that would mean obviously getting more people onto the platform, making it as easy as possible to add new listings, easy as possible for people to understand the regulations in their area, and as easy as possible for people to start making money. Because that's all what this comes down to when you're a host, is how much money can you make to list this property versus renting it out to a traditional long-term rental. The other most important item here, in my opinion, is to continue to improve their products and offerings. So by making the experiences more accessible, easier to use, easier to find, easier to manage and run, this is going to expand their market from just the stays all the way into the experiences market, which is right now a massive opportunity for them. So what do you guys think? Is Airbnb going to continue to grow, or is the competition and regulation going to slow them down? Let me know what you guys think in the comments below. Well, that's all I've got for this week, guys. If you enjoyed the video, please leave a like, and don't forget to subscribe for more content. See y'all next time.